Hi there, business owner. Are you looking to improve your business knowledge? Do you want to see behind the scenes of successful businesses? And more importantly, are you looking to build a better business in just 15 minutes each week? If so, you're in the right place. Welcome to the 3Bs podcast. Hello and welcome back to another episode of the 3Bs podcast, your go-to 15 minutes to help you build a better business. As always, I'm your host Stephanie, and following on from this month's self-assessment tax season, because it's January, today I wanted to go through the expenses that you can claim and things that a lot of clients who, when they do their own self-assessments, forget or miss out and we have to chase for to help you minimize your tax liability and only pay the tax that you have to pay. Now, I caveat that by saying today's episode is not about you not paying any tax. Paying tax is a privilege, and it's really important as business owners to get into that mindset of paying tax means your business is building. It means your business is actually making money, which is what we're all trying to do in business. So paying tax is a privilege. If you need help with budgeting for it or planning for it, an accountant or a bookkeeper are really good for helping you plan ahead and look forward and not get to this January window and panic that you suddenly have tax to pay and no money saved for it in your business accounts. A lot of these expenses work whether you're a limited company or a sole trader, self-employed, but today we're going to focus on self-employed or sole traders, that personal self-assessment tax return, because a lot of those will be doing it themselves at this late point, just a week away from the deadline. So let's get on with it. So what expenses can you claim on your self-assessment? Now, depending on the type of business you are in, it very much depends and varies. But expenses must be wholly and exclusively for business purposes in order for it to be claimable. Now, that means that you would not have bought it if it was not for the business. So a good example of this is when it comes to uniforms. So if you are going out and buying a shirt and tie, just a plain shirt and tie from your local supermarket or clothing store, then you're not going to be able to claim that as wholly and exclusively for business use, because you could wear that to a wedding, you could wear it to a funeral, you could wear it on a Saturday because you feel like it. It's not wholly and exclusively for business use. However, if you buy a shirt that is embroidered with your company's logo on it, that is wholly and exclusively for business use. You're not going to wear that on a Saturday to go and do your food shopping. That is specifically for your business. Therefore, you can claim the amount of that. If you have expenses that are sort of, some are for business use and some are for personal, mobile phone bills, internet are great examples of that. You can claim a percentage of your usage, how much of that is actually used for business use, and I'll go through that in more detail. But yes, you only claim a proportion that you use in the business if it's a mixed usage. Wholly and exclusive for business purpose, you can claim the whole amount. The first one I'm going to go into is the one that I've talked about on the podcast before, and that is your use of home allowance. So your use of home allowance, if you work from home, a lot of business owners that are listening to this or watching us on YouTube will have working from the kitchen table, or their summer house, or their shed, or their living room. So those types of people don't have a specific base for their business. So the use of home allowance is something the HMRC introduced, and it can be done in two ways to claim your use of home expenses. But the allowance is a simplified way for you to claim your percentage of cost for utility bills and things like that. So the rates are dependent on the amount of hours you work per month, and you can use this flat rate. So by this method, 25 to 50 hours a month, you can claim £10 that month for business use off your self-assessment tax return. If you've worked 51 to 100 hours in that month, you can claim £18. And if you've worked over 101 hours in that month, you can claim £26. So if you work over 101 hours per month on your business from home, you can claim £312 a year from your self-assessment as expenses. That does not include phone or internet costs, which people often forget. Your internet and your phone costs are on top, and they usually are a percentage. So what percentage are you using for business? And that can be deducted from your self-assessment as an expense to lower your tax liability. If you are a house that has a lot of rooms in it, if you are working a lot more than 101 hours per month, or with the current cost of living with the gas and electric prices, it may be more beneficial for you to work out your expenses for using your home in a slightly different method. So the alternative method, rather than using a flat rate, is to get your actual usage from your utility bills and divide that by the number of rooms in the house, and then times that by a percentage that you are using that room for business. For example, if there's 5 rooms in your house and you use one of those rooms 50% of the time, you will divide the cost of your utility bills for the year by the 5 rooms and then times it by the 50% that you're using it. So that would be 12 hours a day. So it would be literally, you are working all day 12 hours and then sleeping 12 hours with no leisure time, which obviously is not how things are usually done, but I'm just using 50% as an example to make it easy for you to understand. That can also be used instead of the flat rate of 10, 18 or £26 a month, and often can be more beneficial. I'm going to say it over and over again this episode. If you need specific help on your unique circumstance, don't listen to Dave down the pub, please, whatever you do. We come across that so much, particularly in January. Go and see a bookkeeper or accountant. They will be able to help you and advise on your unique circumstances once they understand your business. Because it may be you've got multiple different businesses, or you rent out property, or you've got other sources of income, as we mentioned in last week's episode, that may make your unique situation lean more towards a flat rate or lean more towards the actual expenses method. As with the flat rate though, if you do use the actual expenses and divide it by the rooms in the house, your phone and internet are still not included, so do work them out on the percentage of business use too. The second thing that a lot of my clients don't remember to include if they're not using software to track this is their labour costs. So if they're paying other people to do work in their business, often in the construction industry, a plumber or a builder will have a mate that goes in the van with them that they pay every week to work with them on sites and on jobs. Sometimes they go away and do jobs on their own, but a lot of the time they're sort of in the van with them. That cost that you pay them is a labour cost that does need to be included on your self-assessment tax return and deducted from your tax liability. Accountants' fees is another one that so many people don't seem to remember to include. Specifically this year, amount of clients have had to go back and say, yeah, and my bill. So your bookkeeper or accountant, if you're paying them to do any of your business bookkeeping or finances, that cost, their bill, can be included and deducted from your tax bill too. Then you've got your Microsoft subscriptions. So a lot of the time you will use Google or you'll use Microsoft 365 to run your email address to do all your quotes and your Microsoft Word or Google Sheets for your spreadsheets. All of those usually have some cost. They're not often free anymore. A percentage of that may be business. It may be all business use, but if there's a percentage of that, deduct that and include that as well. And bank charges for your business account. So if you're with Monzo, for example, they charge £5 a month for their mid-tier, which means it connects in with your bookkeeping and accounting software. That is increasing to £9 a month, but those costs are tax deductible and need to be included on your tax return too. And then some business accounts work that you don't pay a set fee, you pay per transaction, and whatever those fees are, service charges, sometimes they're called your bank fees or charges, they should be included and deducted from your tax return too. And then I'm going to move on to mileage allowance, because travel is one of the things that most of our clients slip up on, or most of the people I talk to slip up on, is trying to understand how it works. If you are a sole trader and you are traveling to and from clients' houses, not a regular place of work, then you can claim mileage allowance, which is 45 pence per mile for the first 10,000 miles, and then it reduces after that. Now, in order to claim this, you do need to track your mileage. If you're not already doing so, you definitely need to start tracking that mileage however you see fit. There are lots of apps out there that can do it for you, or you can manually put it in your phone or go through your diary at the end of every week and work out your mileage. All of your mileage that is not to and from a singular place of work can be claimed at that 45 pence rate if you're using a car. If you are an Uber delivery driver, for example, Uber Eats, something like that, maybe a takeaway delivery driver, and you use a bicycle, you can still claim 25 pence per mile. Same with a motorcycle. There's a reduced rate from that car, 45 pence per mile, and you can find that information on the gov.uk website or speak to a bookkeeper or accountant, and they'll help you to make sure you're claiming what you should be claiming for your mileage, even if it is a bicycle. Next up is books, journals, and subscriptions relevant to your business. Now, this one is important because if you're in the scientific field or maybe journalism, there are a lot of journals you can subscribe to or subscriptions you can subscribe to that are specific to your business. There is, when I was working in motorsport, there was a magazine subscription called Race Car Engineering. And one of our data engineers used to get that delivered to the office every time it was released. They had it on a subscription. And I said to them they needed to include that on their tax return, and they couldn't understand why, because that is specific to your industry, that's specific to your business. You wouldn't be subscribing to that unless you were working in that business, you were doing that job. So if you are paying for any of those things, make sure you include the cost for them as well. And then I'm going to go on to product-based businesses. So cost of goods works for both product and service-based businesses, but it's much easier for me to explain from a product-based viewpoint. So when you make a product, you buy the raw materials, you buy the packaging to however you're going to package this product that you're going to send. You've then got your postage or delivery charges. If you're posted internationally, sometimes there's customs charges and things that need to be included on there too. And then there's the cost of getting the goods from where you manufacture them to the fulfillment point sometimes. If you get them manufactured and then buy them in, then it's the cost of getting them in from the manufacturer. All of these things are the cost of goods sold. And then you have to include the labour to actually make them. So whatever your labour costs are, whether you have your own factory or you get somebody else to make them and then buy them in, there is a labour cost in there somewhere, and that needs to be included in your cost of goods sold. And that goes right at the top after your income to work out your gross profit before you take off all the rest of the expenses, which gives you your net profit if you want to do some sort of analysis or work out how profitable your business is. If you're service-based, it's usually software, computer subscriptions, things like that. Possibly a meeting room hire if you have to have them on site with you. Anything that is absolutely essential to providing that service, not running your business, providing that service. Sometimes there's membership fees and things that you couldn't provide that service if you didn't have, especially if you're in sort of mortgage advice or financial services. Those all need to be included too. Then you've got all your advertising costs, so website, hosting, domain costs, all these things that you maybe only pay once a year, you don't think about often, need to be included on your tax return. If you're paying for a year up front and it falls after the tax year, so our tax year runs 6th of April to the 5th of April or until the 31st of March, but we're going to go for 6th of April to the 5th of April. It might be that you purchase your domain renewal for the year on the 1st of January, and that covers you to December. What you need to do and make sure you're aware of is divide that by the 12 months in the year and only claim a proportion of that amount on your tax return relevant to that tax year. It works the same with your insurances. Anything that you buy that covers a long period, you need to make sure you're only expensing and claiming the expense on that portion for that tax year, and the rest can be claimed later. We call that an accrual. And there's also prepayments in that you've not paid for it yet, but you'll be using it in this tax year. That also needs to be included. But if you want to look at those, probably best speak to a book or accountant, and they can help you work them out so that you fully understand them in your business. And then capital allowances is the last thing I wanted to mention today. Capital allowances are when you buy big fixed assets. So it's usually machinery or equipment, fixtures and fittings like filing cabinets, desks, things like that. Anything that you are purchasing that you're going to have for a long time in the business. It's not like printer ink or stationery that's going to be used up within a year or so. Capital allowances are there that can help you reduce a liability up to 100% of the cost, which is really important if you have maybe a high tax bill and you need to make the most of all the allowances available. There's lots of different ones, including annual investment allowance, the writing down allowance, and there's also an SBA buildings allowance as well. So depending on the type of business you are, depending on the assets you've bought, that is definitely best to speak to an expert like an accountant. I will leave my link in the show notes as always, so you can always contact us and I can have a conversation with you on what I think is the best way for you to deal with it. Or point you in the direction of a bookkeeper or accountant that can be more helpful. Some of those items do have very specific rules as well. So yes, machinery and equipment can be included, but for example, for the annual investment allowance, they can't be secondhand. They need to be bought brand new in order to qualify. Definitely better to consult a qualified accountant or bookkeeper to make sure that you are claiming what you need to claim, not too much, not too little, and make sure it's most tax efficient for you, so you're only paying the tax you need to pay. And that brings me to the end of another episode of the 3Bs podcast. I really hope that's been useful for you, and you're now looking at it if you haven't submitted your self-assessment yet and gone, oh, didn't know I could claim that, didn't know I could claim that. Do come and find us on social media. If you could like, rate or review wherever you're listening to or watching this podcast this week, it would mean the world to me because it really helps us reach more business owners so that we can all build better businesses. I've been Stephanie, I'm your host, and I'll see you next week for the next episode. Bye. And that brings us to the end of another episode of the 3Bs podcast. Thank you so much for listening. Please connect with us on social media. Like, rate and review wherever you are listening to this podcast so that I can help more business owners build a better business. See you next week.